Hello and welcome to the business interview. My name is Markus Karlsson. It's been flagged up as Africa's next big investment opportunity. The mobile phone market is booming in sub-Saharan Africa, and billions of dollars have been pumped into the construction and expansion of mobile phone networks every year. Nigeria's IHS Africa is tapping into that growth, providing the infrastructure for mobile phone operators. And today we speak to the chief executive of the company, Issam Darwish. Welcome, Mr. Darwish, and thanks for speaking to us today.
Thank you for having me.
Let's start with making that important distinction, because you're not a mobile phone operator, you're not a network, but you provide the towers that mobile phone operators use.
Correct. We build, we operate, and then we lease these towers. Basically, in Africa, it's a bit more challenging than in Europe and in the rest of the world, whereby a tower or the basic infrastructure that goes behind a telecom operator is a bit challenging, complicated. You need to provide power, you need to provide security, you need to provide certain logistical support that in developed markets or in such as Europe and the US, you don't need to. So that's why you need some kind of expertise, deep expertise actually, to be able to do that.
Now, as you say, because not even electricity supply in a country like Nigeria, your home base, it's not secure at all times. Electricity, it can come and go, so you're using generators, right, for each of these towers.
Exactly. Most of the towers, actually more than 80, probably 90% of the towers or the sites in Nigeria do use a small mini plant or a mini power plant, which is made most of the time with constitutes of 2 generators, not even one, because sometimes you just have to run on diesel generators for days and days. So you need that kind of redundancy. So you have 2 generators, you have the automatic transfer switches, that supports that, and you run on diesel most of the time.
A lot of logistics, in other words. Now, in recent years, we have seen the African mobile phone market explode. We've seen it boom. How much more growth do you think there is in that market?
Well, I believe there is a lot of growth yet. Africa today, on average, is probably penetrated at around 50% when it comes to voice telephony. In Europe, that figure is much higher. So I believe as we go deeper or lower in terms of the charges, in terms of the ARPUs expected from customers.
This is the average revenue per
user. Exactly. We will be able to get to further growth. On top of that, data, which is basically the new big thing in telecom, is barely inexistent. We're talking penetration levels of 10% or less in most African countries, and that has to grow. I mean, that has to grow, supported by, of course, access to cheaper data access units, but eventually that has to grow.
What is changing now, though, is how Africans are using their mobile phones, right? It's not only for voice telephony, it is also for those services. And we're seeing fresh services and new kind of services coming up almost on a daily, if not monthly basis. For instance, banking, that's one exciting new thing in Africa, right? And in Nigeria in particular.
Mobile banking, extremely exciting, of course, and of course, because you're talking about millions of people who basically don't have proper infrastructure to transfer money from one place to another. That becomes extremely useful, knowing that 50% of Africans do have telephones. But again, investments and then the regulatory framework has to be behind that for it to work. In many places, that is not the case yet. Although mobile banking in Kenya, for example, has developed well, is doing well, in Nigeria, it has not really kicked off yet.
Now, you mentioned their regulation, and that is an image that we often have of Africa, that it's a very complicated place to do business in when it comes to laws, when it comes to, for instance, that you have to bribe certain people. At least that's the image that we have in emerged economies or in developed economies. What do you say to that at this stage?
Well, I say that has changed a lot. We really don't see much of that. We definitely believe that the regulators are trying their best. There is a lot of room to learn. They need to learn. They need to adapt their methods, their mentality, the way of thinking to the modern ways, to how do the regulators in the international world operate, how did the US get to where they are. They need to understand and mimic in a way and get some training and further development from these advanced regulators. But I see regulators trying. In Nigeria, for example, the regulator is trying. They're trying to come up with regulations that encourage development of activities such as ours, which is basically sharing of towers. They're trying to encourage activities such as data expansion, this and that. But there is a long way ahead. In Kenya, for example, the regulator wants now to license a 4G infrastructure company, and then have the operators share into that, right? That's a good way forward, because that eventually reduces cost rather than having each operator build their own and scramble for frequency. You have one entity in partnership with government building the infrastructure, and then the operators can become like marketers. So they're trying. They have a long way to go, but they're trying.
Now, one big topic of conversation in the business community, the global business community now, is of course the eurozone debt crisis.
Yeah.
And there are concerns that the eurozone will drag down the rest of the global economy with it if it indeed falls. How much of a concern is that for you and your business?
It is a concern, of course. It's always a concern. I mean, the world does not like recession. And if we start going into another kind of dip in the world economy, it may affect the prices of solid minerals. It may affect the price of minerals in general, including oil, this and that. And that might hamper growth in Africa.
But in what way? If we, for instance, see a banking squeeze, if, as I say, that the eurozone does indeed go down, do you think that you'll notice that as well? Will you have a tougher time getting credit and getting those loans that I presume you will need from banks?
We saw that in 2009 when the real estate market crashed in the US and dragged, and the banking sector followed. We saw a massive cash squeeze in Nigeria, and for around a year in Nigeria, in Ghana, in Tanzania, and other places, capital was not there anymore. And and you need capital. I mean, Africa is still trying to develop, is still trying to grow. I mean, if you don't bring in the investments, it's not going to work. What also scares me is that the oil prices has been high for the past few years, right? And that benefits Africa in a way, because Africa produces oil, Africa produces minerals. If the world slows down, if countries like China slow down on their consumption of oil, maybe the US, Europe, that could affect the price of oil in a way, and that could hurt Africa.
What kind of image or what kind of impression are you getting from potential suitors, potential investors, potential Western investors from Europe and indeed the United States? What kind of signals are you getting from them at the moment? Are they cautious because of what's going on in the eurozone, or are they still interested in your business?
They're extremely bullish, actually. On the other hand, they're extremely bullish. Over the past few months, we have signed in 4 international investors with a total of $250 million investment into our company only. The World Bank, the IFC, which is part of the World Bank, ECP, which is Emerging Capital Market, it's DC-based, it's Washington DC-based private equity firm, Investec, which is the 3rd largest bank in South Africa, and FMO, which is the Dutch DFI. The 4 of these guys have invested, plus a bank, around $250 million in us. I'm talking the past few weeks, right? So I see bullishness in investment in Africa, especially in our sector.
What would you say is your main risk, or what kind of risks are you seeing at the moment to your business, and what's the main threat?
In terms of, I would say growth in terms of data needs to be there. I would say growth still needs to be there. If the economy in the world slows down because of things like the crisis in Europe, because if we realize eventually that there is a real estate bubble in China and it bursts and then it drags the whole world down, these kind of things could really hamper our growth. I think this is our biggest challenge.
What about competition? I mean, we have seen more and more competition in the African mobile phone market. We're certainly seeing an abundance of networks and of operators heading into that market. What does it look like when it comes to your segment?
Yeah. That's correct. Airtel, as you know, last year they came in and they bought Zain's operation in sub-Saharan Africa.
This is the Indian company.
Yeah, for almost $13 billion. Again, France Telecom are expanding. They recently acquired an operation in Congo, Democratic Republic of Congo. So competition in Africa is a good thing. I don't see it as a bad thing. And again, because of the size of the market and because where we are, at 50% penetration, the market is not mature. There is room for everyone. So people that invest, new operators, it's okay. It's not a bad thing. From our point of view, from the infrastructure support point of view, it's actually good. We're still not too many, which is good for IHS. But again,
so you're not being crowded out of the market just yet?
Not yet. People
right.
like American Towers have come in. They are the largest in the US. People like Vion, Equipo in India, they're trying to come into the market, but it's still relatively not a fierce competition yet.
All right, there's still room for everyone. That's pretty upbeat message there.
Yes.
Thanks very much indeed, Issam Darwish from IHS Africa. Thanks for watching this edition of the Business Interview, and thank you for watching France 24. Do stay with us. There's more news coming your way.